right. Hey there. Welcome back every day, everybody, every week is what it is, every week. Chris Franks with Texas West Capital. Of course, joining me today are going to be Andrew and Tillman from Arch Public. And we are Beards and Bitcoin. We're going to discuss the latest week's news in what's going on with Bitcoin. And there's a lot of it. We'll talk, a little bit about MicroStrategy, what they've been doing. Bhutan and how they're holding a ton of Bitcoin as well. Bhutan, not exactly sure how to pronounce that. Asian country there. The fact that Bitcoin ETF flows have been positive 6 out of the last 7 days. BlackRock released a Bitcoin report. If you guys haven't seen that, we'll talk about that a little bit there. And so, as it is, always kind of something to talk about here to get you all in the right mindset about what's going on and kind of how to look at Bitcoin beyond just price and whatnot there. By the way, before we get going here, make sure you hit the like button here, guys. You follow us, you subscribe to the channel. You can follow Tillman and Andrew. Their links are underneath this video here on YouTube, as well as in the post there on my X feed. So make sure you're following them for some good information and whatnot. And, Tillman's a good looking guy. You don't have to believe me. He'll tell you that. So let's kind of bring him up here. We got Mr. Andrew and Mr. Tillman here. What's going on, guys?
Your words, not mine. Your words.
Well, I think they've been your words before. I do believe we have, video.
Well, it's generally in response to me giving him a hard time, which, I understand. I give him a hard time. He's got to defend himself, which is appropriate. Okay.
Listen, my level of security in how I look will definitely not be determined by you two jokers. So that is not. There is nothing you can fire at this armor that's going to penetrate it.
Oh my God! So all right, man. So now that we've gotten that out of the way, I'm sure we'll be talking about it again next week. Okay. Anyway, but yeah. So let's go ahead and start off. I guess with MicroStrategy, because let's face it. These days, when you talk about Bitcoin, you've really got to talk about MicroStrategy. They came in with the whole treasury asset idea, the whole buy and hold on an astronomical level. These guys just keep issuing debt, and it's gobbled up like immediately. I mean, there is no shortage of demand. You've got, when we look at the chart, when we look at social media, we see everybody's all, down in the doldrums, and the cycle top is in because we've been basically sideways more or less for the last 7 months. And yet MicroStrategy continues to go out there. Saylor continues to go out there and issue new debt that is gobbled up instantly and put out there. So what did they do? We heard that just recently, I mean, like a week ago or something, they issued what, $1.1 billion, bought themselves about 18,300 more Bitcoin. And that was their largest issue of date. And then all of a sudden, now they're issuing, like a week later, they're issuing another 875 million. I mean, absolutely incredible, wouldn't you say?
Well, I think, if there's anybody that's dialed into the Bitcoin the halving cycle, it's going to be Michael Saylor, right? So he sees what we're seeing. He sees sideways movement, over the past 6 to 7 months. He sees what the other cycles look like. And the truth of the matter is the other cycles have found us, down 60, 70, 80% in the previous halving cycles by this point. And so if we're not down that much, we're down 20%, right? He's thinking, we have an explosive, top that's coming over the next 18 months. And 18 months for a treasury focused process is nothing. It's really nothing. And so he's positioning himself, he's positioning MicroStrategy. And the reason why that debt gets bought up so quickly, it's just an additional proxy associated with Bitcoin versus the ETFs are holding spot in some way. And so if you're an institutional type investor and you want some level of access and exposure to Bitcoin, MicroStrategy is a very easy way to do it. And he continues to buy in size. So if you're a believer in the cycle, and the cycle will again, it will again repeat itself like it has now essentially, 4 times. Michael Saylor's a guy that he has done the work and taken the shots and taken the arrows when Bitcoin went from 69,000 down to 14.
Yeah.
Everybody thought he was going to get liquidated, absolutely liquidated at that point. Didn't happen. Still standing on stage, still evangelizing for Bitcoin as the ultimate hard money. And so if we're here now and there's been big adjustments, and oh, by the way, holding Saylor's hand philosophically is Larry Fink, no shock that they're continuing to lean into huge size of buying Bitcoin as often and as big as they possibly can.
Yeah, I think, and I think, where he bought it right now makes a lot of sense, especially from more of a, even though he's not a technical analyst, more of a technical point, because we've been sideways, for the 7 months. We've done nowhere near what we normally do on the halvings on the pullbacks. And if we're looking to rally from here, I mean, you get in your largest buys right now, where you're nearer that bottom on that pullback. And then it's all kind of blue sky after that. And you really kind of, because we all have to remember he's averaging in, right? I mean, as he buys up here, his overall average cost is going to rise. But if you can get it here and it's rallying to 100,000 or higher, I mean, this is absolutely a fantastic place to buy.
I think his actions have proven that he's not interested in short-term price action.
Yeah.
I don't think he cares. I think he is playing, when you're at that level of wealth and you've made it past the too big to fail marker, which he definitely has in his Bitcoin holdings, you're not playing the same game and you're not looking at it from a growth perspective. You're looking at it as a wealth preservation tool. And he has said this vocally on several podcasts. This is a short against the dollar. That's what it is. So, when you have a company that's making a lot of cash, what's the best way to hold on to it? To buy Bitcoin. And he's proving that. Now, buying Bitcoin with debt is, it's not for everybody. But to Andrew's point, this guy knows the markets. This guy knows a lot more intricacies that allow him to take those bets and to have contingency plans to ride them out in the event that they, don't go their way, like we saw in the last cycle.
Yeah.
So it's one of those things. He's in my mind too big to fail unless he gets really stupid, and I don't see him as a stupid person at all. And at the same time, look at the two political paths that we have coming up in front of us, okay? One political path is Kamala wins, and hyperinflation continues, and the printing presses go burr, and we get 75-point rate hikes or rate drops, and we get all of the stuff that goes along with the printing presses going burr, okay? And if that's the fact, then what's going to happen to the price of Bitcoin? What happened to the price of Bitcoin when the pandemic happened and everybody had their stimulus money?
Yeah, exactly.
It's going to go up, right? So what happens if Trump wins? He's going to institute Bitcoin policy. He's going to latch himself even further to the Bitcoin name, which should drive price up. So in my mind, Michael Saylor's going dollar, regardless of outcome. This is a safe bet against the dollar. I'm shorting my profits essentially, and I think it's genius. And quite honestly, I think it's the first derivatives product that really has taken center stage as it pertains to Bitcoin. That is a derivative asset to Bitcoin. Why does his stock go up? It goes up because Bitcoin goes up. It doesn't go up because they did X, Y, and Z, because they've already gotten so much concentration of Bitcoin that anything they do down here doesn't make a lick of difference. You see what I'm saying? If Bitcoin goes to 250,000 a coin, that company couldn't do anything to make that much money, right? Other than holding Bitcoin. So it's now, in my mind, a derivative asset to Bitcoin and a leveraged asset to Bitcoin. And as long as you believe in Michael Saylor's ability to navigate those, white capped waters when things get rough and you're leveraged into your position, then you probably have an appetite to ride on his boat.
Yeah, yeah, and that was one thing that I kind of discussed back when he first started buying. Was around 2020 or so, when he really started kind of getting into it. And I brought up charts a few times, looking at him and his competitors coming out of the .com bubble crash, because he was the high flyer. When 2001 came in, .com bubble crash, he was at the top and he went down. I mean, he was, that close to completely being wiped out. And then he kind of rallied up. But by the time 2015 happened, Tableau and all those other competitors, you can look at the charts and they start taking off, and he's just kind of doing this little, sideways thing here, going sideways, and they all took off. And so, it was only about 2019, 2020, around that point when he started buying Bitcoin, that MicroStrategy stock started rallying. And I believe I even came across, I don't have a link with it, unfortunately, at this moment, but an interview or something that he did at one point where he was talking about, that was his decision at the time was, listen, either I do this or we're basically not going to be much of anything anyway. And it turned out to be, a great decision. But man, you look at how people take heat on social media, just regular people like us, I can't even imagine being in his position, and really just diving so deep into it, and having to take all that heat, because I was one of the people who gave him heat at first. I wasn't a big Michael Saylor fan at first. But
you know what you find with people that come out of that type of heat? Conviction.
Yeah.
Michael Saylor doesn't need a pep talk. He doesn't need anybody holding his hand. He has conviction down to the core of his being as it pertains to Bitcoin. And guess what? If you run a ship that wants that to be your mantra, there's not a better man on the planet Earth to do it, right? That's what he eats, sleeps, and breathes. And he can talk it, he can walk it, he can do it on the traditional side, on the non-traditional side. I look at legacy enterprise, and then the shift out of legacy enterprise software solutions.
Yeah.
And Bitcoin is this massive shift forward, right? It's like when people were using Lotus 123 and Excel came around and blew everything out of the water and changed how companies worked, created huge profitability in spaces that they otherwise couldn't quantify and couldn't track. And like that power is at the behest of the person who knows how to wield it. And at an institutional level, if you adopt that kind of technology and that type of mantra early on, you stand to make fortunes, especially if you can ride through the fleshing out process that traditional institutions will put it through if it gets to a sizable, if it makes a wave. And so Bitcoin's made that wave. It's been adopted by the traditional finance, segment of the world. And they've said, hey, yes, in fact, I think Larry Fink, didn't he say, I was wrong about Bitcoin? That's a bold statement to make. That's eating your words because you believe in something so much that you can eat those words. And so that level of belief from a guy like Larry is proof that we've made it through the culling out process. The fire has solidified. We've got pure gold now at the bottom of the ingot, and we're ready to start doing that on a repeatable process. And Saylor is one of the few people that are from the legacy that made it through the storm. And that gives him a special spot for eternity in the Bitcoin space. I mean, who else can you say made a bigger bet on Bitcoin at a more risky time? I don't know of anybody other than Satoshi, but yeah.
Yeah, and as we continue to talk about, as far as risk goes, it's much less risky to buy Bitcoin today than it was, 4 years ago, 5 years ago, 8 years ago, 10 years ago. And so, again, what you're saying, they're definitely significant in that he put in such a significant push into it at such a point at where it was, a lot riskier than today. People are going to come in today and go, okay, yeah, whatever, when they're coming into Bitcoin, but they haven't been around, a lot of them, like we have, back there.
Well, if there was a meeting that was set up right? And the meeting was set up by Larry Fink's people and Michael Saylor's people. And it was set up 4 years ago. Who bows to who at the meeting?
Yeah.
Saylor bows to Fink 100% of the time.
Yeah.
You have a meeting about Bitcoin today. Fink's going in there and going, tip of the hat, you're the captain of the industry. You tell me what you know because I can learn from you. And that's incredible, man. That's something that Saylor should be incredibly proud of himself, because to weather the storm and to do it by yourself on your own supply and your own resources, it's very few people have done that in history.
Well, and imagine that, Saylor, when he started this journey of bonds that he turned into Bitcoin, it's probably a lot like what Michael Burry did back in the financial crisis when he was going to banks, and those particular scenes in the movie that we all remember, where he goes into Goldman Sachs, he goes into a bunch of different things and says, I want to bet against housing prices, and I want to bet against mortgages. And they're like, what are you talking about? Nobody does that. They're like, well, okay, fine, we can give you a position for 50 million. And he's like, well, can you do 500? They're like, well, yeah, sure we can, no problem. And because they thought this guy's about to hand us $500 million for nothing.
Well, that's a guaranteed loser. We're going to get to keep it. Yeah.
Right. So it probably in the beginning of him doing this was much like that. Like, where did he have to go to get, to create the leverage and go and get that opportunity. And they were probably like, you're nuts. Like this is insane. And they were all wrong. Right. They were all wrong. And so it's, I think in that scene, as he's walking out of Goldman Sachs, he's like, hey, can I have one of these cups? I like the cups. Right. And he takes the cups, and then the ludicrous Shake Your Moneymaker song starts playing, because he was right. Right. Like, he was right. And Saylor has been right. And it is interesting that there hasn't been a ton of, even though he does his event each year that is teaching other corporate organizations to do this same thing. There hasn't been a ton that have followed suit. And I wonder what's behind the curtain there, because he's obviously been wildly successful. So I wonder, one, why other corporations haven't done it, and two, is it the kind of thing where banks are like, okay, we're willing to take this risk with one guy. We may have 10 others that have come to us to do this, but we're not going to do it. I don't know. Yeah, I don't know.
I think it's exactly what Chris said earlier. Saylor did it at a point where he was like, we can keep being mediocre, or we can shoot for the moon. And most people don't have the stones to shoot for the moon. Like, that's a risky endeavor. But you're alone. You can die. You can be an idiot. People can put you on the front page of lots of newspapers and say that you were a complete moron that, pissed away fortune. There's all sorts of ramifications. And so if you're on a board of a company, it's in your best interest from a liability perspective to basically be the no person. Like, no, we're not doing that. That's dumb. And so it will take companies that have to do it, right, to break that mold. And then you start to see the trickle in what eventually becomes the paradigm where you have to do it, because there's enough concentration over there, and the companies that have done it have taken off. So now you look like the weakling in the herd because you have no Bitcoin on your balance sheet. Think about it. 10 years from now, I don't think that will be that far off. I think that if you're evaluating publicly traded companies, you're going to ultimately have to evaluate what they're holding as their core asset. And when you hear things like, I've heard, at some point, Dell's holding $2 billion in cash, or 20 bill, whatever the number is. At the end of the day, that was a strong selling point for their stock. Well, what becomes the strongest selling point when Bitcoin's held a price accumulation or price appreciation curve over a 40-year period, and you're holding 2% of that asset class? I mean, it's mind-boggling what that multiplier will yield. And the multiplier is because, like, if I can show you, if I drill an oil and gas well and it's a virgin well and we hit oil and boom, it's shooting out of the ground, you're not going to pay me a high multiplier on that. Why? Because it may fizzle out in a week. It may be under great pressure now and not under great pressure a year from now. What will you pay a lot of money for? You'll pay me a lot of money if I show you a well that's been producing at a steady decline curve for 25 years and has projected reserves of another 75 years of production. That's what you'll pay me for. And you'll pay a lot of money to get those 75 years of cash flow. And so that's the same thing with Bitcoin. Once this starts to denominate into peripheral investment opportunities that yield something, game over. You know, you will have the strongest asset class to demand the highest yield. Therefore, you will want more of that asset, which will only drive prices up.
It doesn't get as much press, and it should. But a reminder again, you know, there are certain folks that we consider the sharpest minds in business, right? Yeah. Nobody would argue against folks that would argue against this are just not all that intelligent, or they're
just not. They don't see it the same way we do.
Well, the political, you know, scales in their mind are skewed. But a guy like Elon Musk, by the way, holds, I think, $800 million worth of Bitcoin on his balance sheet and has never sold any, right? So there's always been this commentary each quarter, like, has Elon sold some, or maybe Elon sold some, or maybe he doesn't talk about it anymore. He doesn't really do much, but he hasn't sold it. He hasn't taken it off their balance sheet. He hasn't done anything meaningful with it. So again, that is another passive, you know, thought process associated with having Bitcoin on your balance sheet. Doesn't need to make up the entirety of your balance sheet like MicroStrategy.
Well, I think that will be determined based upon how intensely you're spending your cash. If you're in a Elon Musk trying to get rockets on Mars, you know, you got to keep a lot of cash on hand and can't be subject to the Bitcoin, you know, fluctuations. But if you're a MicroStrategy and you kind of know what your costs are, then you can bet a lot of that cash reserves that you hold or your profits into Bitcoin. And that's the beauty of business, is that even your core business will lend itself to advantages and accumulation of Bitcoin and holding Bitcoin, right? You can hold more if you have a great cash cow type of a business.
Yeah, let's talk about this chart here. I got this from Andrew. Andrew posted this on his Twitter, X, whatever you want to call it, feed there. You want to walk us through this here real quick here, Andrew?
Yeah, well, it's a BlackRock. You know, BlackRock continues to put out research pieces associated with Bitcoin because, you know, they've gone all in for all intents and purposes. And you can't, you know, internally, it's one thing to create a product, and then it's another thing when that product becomes your most successful product of all time. BlackRock is the, you know, godfather of ETFs. They created ETFs as they exist now. So when your Bitcoin ETF is your most popular and most successful launch of all time, yeah, you're going to lean into that particular asset class. So this chart here is effectively a look at you know, what do Bitcoin cycles look like, what do halving cycles look like, and what are the expectations. And so look at that last cycle there, which is, you know, late 2020, early 2021. And again, the green is showing a 21x return, and then you've got a downturn after the quote unquote halving of 77%. Well, here's the reality. Price has returned to those levels again, as it does every time. You're looking at the chart with me. It returns to those levels every time and then goes significantly higher after a dip. The difference now is that you have a different floor associated with Bitcoin than you did before, because the floor associated with Bitcoin before was what's going on at Binance, Coinbase, BitMEX, and KuCoin, which were, you know, all of them completely unregulated, all of them, all kinds of crazy stuff going on. Throw FTX in there now. Now the floor is associated with BlackRock, Fidelity, ARC, VanEck, Bitwise. That's where the floor is. And those organizations are extraordinarily regulated, using the back-end custody services of the likes of Gemini and Coinbase and Fidelity being its own custody partner. So you have a different dynamic in price now, but you also still have the cycles that exist and the upward, momentum associated with price. So we're down 20%, let's call it 21, 22, depending on the price today, still sitting at 60. At 60, we're down 20%. Very, very different than down 77, 83, 84, 93. Oh, by the way, in each cycle, that downdraft number is less and less. So it's, we're seeing that play out right now.
Well, I can chime in on that from a math perspective, but this is what Fred Krueger loves to, really talk about, which is, and so does Giovanni and a bunch of Bitcoin guys, but the power law. It takes a lot to cut a key for any one cycle by itself. Like if I stood at the beginning of each one of the cycles and said, tell me what the peak's going to be, tell me what the trough's going to be, tell me what the mean's going to be, and tell me what the long-term appreciation hold's going to look like 5 years from there. Everybody would have predictions and everybody would be wrong. The thing that's beautiful about the chart that you have right here is that not only was it right, but it was right 4 times in a row. And those 4 times have played mathematically into a perfect power law chart. And what do you mean by that? Well, you look at the slope of the curve. So the curve starts off very, very steep, as any industry does when it's brand new. And then it starts to level off as it gains concentration and as it builds what Andrew just referred to as a foundation. That foundation has to be flat, and that's why the curve flattens out. It has to build. A lot of buying has to happen over that time period. And the more money that is being put into it, the flatter the curve is, the bigger, essentially the tighter the range becomes. And we've seen a tightening range over every single cycle. We've seen a flattening curve to a point now where we've got a pretty strong foundation. So the next leg up, and the legs up that are going to be going to be a consequence of this, are going to have more and more mild variance to it. It's going to have less and less volatility. But the good news is it's going to be more predictable as a upward trajectory pattern. It's going to have less volatility to the downside as well, which will allow more derivative assets and more cash to flow into it, which is the ultimate goal here. If it becomes that base derivative, store of value, there will be trillions and trillions and trillions of derivative assets being played off of it.
Yeah, exactly. And then, like you said, that's the goal, right? I mean, if you're just in the market, just in, trading Bitcoin or whatever, maybe you don't see that. But that's what we do here each week, right? That's what we're trying to do, is get people out of that day-to-day price action into a bigger idea of what Bitcoin really is, what it can become, what it can lead to, how it can save us all from fiat debasing, right?
Well, I had this conversation with a friend of mine today, actually. And if you talk about, like, for example, let's say you're a company and you want to buy a piece of real estate in, another state other than where you operate. You can't go to the lenders in your state of operation and use your bank accounts there and your balance sheet in a way to get a loan directly from them, because they can't lend. A lot of them can't lend across state lines. And so you're forced to go out and use another provider that wouldn't be your first provider of choice. Like my first provider of choice would be my local bank, the one that knows me, then had the reputation, but they can't serve me in that capacity. Well, if you have Bitcoin, and let's fast forward to a place where the banks have recognized it like they've recognized any asset that they can loan against, like real estate. Now, it doesn't matter where that property is. I can pledge my Bitcoin as collateral to a loan at the local level, take that cash, and then distribute that cash to any any endeavor that I want, regardless of the jurisdiction of that endeavor. That's flexibility. That's taking friction out of the current banking system. That's all going to bring more liquidity, more buying, more volume to the game, and that drives the price up by definition.
Yeah, let me see there. I've got this other one here. Of course, another one from Andrew here. Let me see if I can make this a little bit larger so people can see it. Says, update, BlackRock sounding like Adam 3 US in the latest Bitcoin research report. We kind of alluded to that at the beginning here. BlackRock has posted a Bitcoin report called, let me see if I can find it here real quick. You guys can find this online. It's called Bitcoin, a unique diversifier. Why Bitcoin's appeal to investors lies in its detachment from traditional risk and return drivers. And so Andrew pulled this up here. It says Bitcoin could be a hedge against increasing global disorder and declining trust in governments, banks, and fiat currencies. Yeah, I mean, yeah. I think that a lot to what, if we're looking at it, honestly, I think that's a lot of what drives many of us into holding some Bitcoin.
Well, I mean, heck, I said that, BlackRock's sounding like Adam Back, who was one of the few folks left that is mentioned in the Bitcoin white paper. I mean, BlackRock in this statement is sounding like Satoshi himself. Power serves as a hedge against increasing global disorder, declining trust in governments, banks, and fiat currencies. I mean, I don't know if they plagiarized that from the Bitcoin white paper, but it's again, it's a pillar of their commentary on their website and their research that they put out associated with why you should have a position in Bitcoin, and of course why you should hold that position in their Bitcoin ETF. But that is serious stuff right there, man. Like
it isn't to me here's the thing. I graduated from University of Texas and with a finance degree. That's like 101 freshman year. You go in and you learn that type of stuff. The sad thing is that it's not common sense to our children. It's not being taught in schools because the idea of diversification is as old as money. Like that is the way you hedge against uncertainty. And the fact that it takes BlackRock to say this is just mind-boggling to me. I know BlackRock we should all endorse, but people should try to dig a little deeper into the convictions that BlackRock has to have to say those things so that they can own some of those convictions themselves. Because I just to take anything at face value is kind of, in my opinion, not as beneficial as digging into it and understanding it yourself. But like to have something that hedges you that's not correlated to other things, as soon as you find the next one, let me know, because I want some of it too. You see what I'm saying? Like, yeah. It should be so common sense slapping us in the face. When someone looks at Bitcoin, you should just be able to point to those things and they buy it. Like, I don't understand it.
Yeah. Well, but again, if we weren't emotional and ignoring all that, on a regular basis, I guess we probably wouldn't be human, right? It's that emotion that kind of makes us human. But
have you ever met a gold hoarder? Have you ever met a gold hoarder that doesn't own any silver, or a silver hoarder that doesn't own any gold? Like the rest of the world understands this, and they practice it, and yet we in the crypto space have this nativism and this tribalism to what we believe in, to the point where we can't even have intelligent conversations. It makes us sound unintelligent, in my opinion, on a global stage when we're talking about everyone owning 80% of their net worth in Bitcoin. That's not what BlackRock thinks. BlackRock is saying, hey, it's now accepted into our ecosystem as a legitimate hedging tool. Yeah. Thank you very much. That's all we need. We don't need anything else. how do we ride that wave as well as we can ride it? You know what I mean? Like, and I would
Yeah.
love to see Bitcoin, the Bitcoin community specifically, and crypto as a whole, recognize how important that step is, and everyone rally all of their energy behind that, because it is the key to the rest of it opening up. If you're a big ETH fan, nothing happens without Bitcoin being successful with what it's got to do right
Yeah.
now. So if you don't bet on Bitcoin, you're not betting on ETH either, in my opinion,
Yeah.
because you're discounting the entire industry and where we are today, where we sit, and what the chances of us getting to that holy grail economy where everything's digital and we can do business 24/7 with anywhere, you know, like, if that's what you believe in, like, we've got to have the world adopt it, and it's got to be on some rails that everybody can agree on.
Yeah, yeah. So the key points here, and I think it's a really great point you made there, real quick before I go on these, is that idea that, listen, if you're pro anything, if you're big anything in crypto, you have to be big Bitcoin. Bitcoin is the granddaddy. It was the first one out there. It's the most well known. Even when you compare it against, Ethereum, you still have a significant portion of people that have no clue what the hell Ethereum is, never even heard of it. So yeah, if you've got Ethereum or Popcat or whatever the hell your shitcoin is, you absolutely need to be out there pushing Bitcoin, because if Bitcoin is to go away, you're not going to stick around. It's not going to be like, oh, Bitcoin was this old thing that came in, which a lot of people tried to argue for a while there. Oh, it doesn't do all this other stuff, so it's going to the wayside. It's going to get taken out. No, it was the first one. It is synonymous with crypto.
Well,
Without Bitcoin, there really is none, right?
we're a fleet of ships in the Bering Sea, and Bitcoin is the only icebreaker we've got. So
Yep.
if you don't make sure Bitcoin survives, we're all doomed as a fleet. It's the only one that has the mass that can break through the ice and get us into open waters, and that's the way I look at it. And so we should, as a community, be looking at everything through that lens. In my, vote with your dollars.
It also helps that there's not a CEO or a head dev of Bitcoin that stands on stage at token 2049 and sings some weird song. I mean, the videos from Vitalik being on stage at token 2049 in the last 12 hours are like, come on, man. Like, what all you have to do is not that. and Ethereum probably is good, but you see that and you're like, yeah, therein lies the centralized quote unquote risk associated with Ethereum as an asset, and that we begin to then go down the proverbial steps associated with why Ethereum is their ETFs have absolutely sucked, right? So we've had 500 plus million that has gone into the Bitcoin ETFs over the past week, right? And Ethereum ETFs have seen a 550 million in outflows since inception. So there couldn't be a wider chasm associated with how are serious people with serious portfolios that aren't concentrated on Poloniex, right? They're at UBS and Morgan Stanley and Merrill Lynch.
Yeah.
How are those people evaluating those two assets? And the message is remarkably clear. It's Bitcoin makes sense. I understand it. And it seems to need to be added to my portfolio, even if it's at a 1% to 2% clip. Ethereum, I don't know what it is. I don't understand it. It has several different names. There's no cap. What is it? How do I even against other assets that I own? Like, what was it? How does it? What's the comparison? And then why is there's this Russian guy walking around wearing weird clothes and singing songs? Why would I want to be invested in that? And why are all the other smart people supposedly that are institutions selling the crap out of these Ethereum ETFs? Why are there outflows? I don't want to catch a falling knife.
Yeah.
So
I'll go as far as to say this, and forgive me if this hurts anybody's feelings, but Ethereum's been the most detrimental thing to the crypto space, in my opinion, that's ever been created. Why do I say that? Well, because more ICO scams came out of Ethereum than any other, more people who had genuine interest in learning and growing in the space with us got turned off by the fees associated with Ethereum, with the rug pulls associated with the ICOs that happened in the last cycle. Like a lot of the critical mass that we called our own, that we called our own community, there was a lot of people that got burned in those things. Now, granted, there was also people that made a lot of money. It's a zero-sum game. The losers transfer the money to the winners. But there were a lot more losers than winners. The concentration of the wealth went to the few from the many, and it didn't go from the many to the many. It wasn't a in the stock market, for example, there's not a central dev that can suck up all of the stock. There's not a market maker that any point in time starts playing nefariously against the retail side of it. And in this space, that was literally what was going on for a large portion of the market. And even this last cycle had remnants of it, right? The runes and what happened with all that whole thing. Where's all that now? Why isn't everybody talking about how, you know why? Because none of that has staying power compared to registered investment advisors adding Bitcoin to your retirement fund. Like nothing, like that is so disproportionate in terms of effective impact. We are on a moving, we're moving at light speed on the back of Larry Fink and those people. So we as a community need to start focusing on them as our customer. What do they want? Not what we want. Not we want runes. Well, what do they want? Well, they want things like Michael Saylor's company that can turn into derivative investments that bring liquidity to the markets and get everybody excited.
Yeah.
There's only one way that Ethereum, I think, becomes a meaningful asset long term, and it's if Larry Fink, frankly, saves it. Because they have some small projects that they're incubating and working on, and there's an opportunity with the new stock market that they're building in Texas that will probably run 24/7 to take massive share away from the New York Stock Exchange and the firms that the ICE controls across the globe. They're going to do a 24/7 stock exchange, and I think that they're going to tokenize it in a fairly meaningful way. So the only way that I think Ethereum doesn't become a legacy asset that flails, so to speak, is if Larry Fink saves it. And there's a real case that he's probably in the process of doing that.
Well, let me just tell you something. From my vantage point, and I'm a big Larry Fink fan, obviously, I would lose a lot of respect for him in his due diligence if he chose Ethereum to be the base layer for his smart contract functionality. I mean, it is far inferior to a handful of other technologies. And if you go that route, it will be short-lived and replaced quickly, is my point, because it only means that there's a deficiency in his due diligence team. It doesn't mean, because if you understand the tech, there's no arguing it. Ethereum's slow and expensive. It's like it's saying, hey, let's start selling horse and buggies again. You can. I just don't think they're going to replace the Ford dealership down the street. And so I would be shocked if he picked Ethereum and he saved Ethereum. But I've been shocked before. I was shocked. I didn't think they were going to get the ETF out. I didn't think it was going to do well, so I wasn't shocked about that. But I didn't think they were even going to get approved as fast as they did, and they did. So I may be shocked again, but guys, I'm telling you from a tech perspective, I'm not the sharpest tool in the shop, but I know enough, and I've been around long enough to use these techs, the base layers at their core value. And I hate Solana. And I still would choose Solana over Ethereum as the base layer. So, I mean, if that tells you anything, and it's not because I hate Ethereum, it's because it's that bad from a tech perspective. You're using, like, you're using outdated technology, and instead of building the new house, you just keep adding wings to it. And so it looks like this hodgepodge Frankenstein tech build instead of like even the notion that you can take Ethereum from proof of work to proof of stake is insane to me. Like that didn't that didn't happen technically, I can tell you that much.
Well,
It happened through manual process. It happened through people going, I want to put money in this new thing. It was a completely different thing. It wasn't the same chain. It wasn't the same endeavor. It wasn't the same protocol. It had no similarities whatsoever. That to me is like in and of itself a fatal flaw. If you've had to change your protocol in the course of your history because it became outdated or archaic, who's answering the question is when does the next version become outdated and archaic, or is it already outdated and archaic? Because in my estimation, it is vastly outdated.
Yeah, and just so everybody's clear, we're not saying, I know we obviously have our opinion as far as Bitcoin goes, which is why the show is Beards and Bitcoin. But we don't for a second believe that alts aren't here to stay. We do believe they're going to be there, but we also believe most of it's trash. Almost all of it absolutely is trash. There's got to be a purge of it, kind of like the purge that happened after 2017, with the ICOs and nonsense that came out then. Again, Fink is looking at RWAs, tokenization of everything. And, as Andrew and Tillman have said many times here, if Fink says, listen, this is what we're doing, then smart money says, okay, we're going to go along with what Fink's doing because he's rarely to that point. Yeah.
Remember,
he comes up and says it, right?
silver ETFs exist, but does anybody ever talk about those things?
Right.
No, nobody talks about silver ETFs, and nobody makes meaningful allocations in their individual portfolios to silver ETFs. If they're going to buy a quote unquote hedge against inflation in a traditional way for the past, 25 years before Bitcoin became what it is today and access to those ETFs existed, people would allocate to gold ETFs. People would allocate to gold stocks, right? They didn't they weren't making meaningful allocations after that to silver and ETFs and silver stocks, not in any meaningful way whatsoever. There were Ethereum guys, right? Ethereum influencers, so to speak, which is just code for they've got a lot of followers on Twitter.
Where they were given a lot of Ethereum from the foundation. I want you to think about that.
Yeah, and they were, making claims like, well, because Ethereum's this, that, and the other, I think, in the medium and long term that Ethereum's going to 2 to 3x the amount of inflows as the Bitcoin ETFs. And I'm like, people think these people are serious people. That is not, what are they talking about? and so, yeah, I saw it from 1,000 miles away. I'm like, why is everybody forgetting about the grayscale problem? Why is everybody thinking that somehow there's going to be a magical narrative that just pops up out of nowhere that is going to resonate with your average 61-year-old investor sitting in a UBS office making some adjustments to asset allocation? It's not. It doesn't. Yeah. It's not. And that's already built into Bitcoin. So, yeah, it's interesting, and I agree with Tillman that where does tokenization go? Where does that road lead us? I think that conversation about that and how it actually plays out is probably very, very different 48 to 60 months from now than it is today. Like everybody thinks, okay, if they're going to do this and this is how they're going to do it, it's going to be an Ethereum focused type of deal. Who's to say that there's a world where a new chain is created in some way.
You hit the nail on the head, Andrew, and I'm going to tell you, unfortunately, in my opinion, what that new token is. Mm-hmm. It's the CBDCs.
Yeah.
You let the market flesh out the smart contract piece of this. Mm-hmm. You find the best protocol, which if I don't know near as much as some people out there, but if I just said technically speaking, Avalanche is up there top of my list, okay? Mm-hmm. So let's just say you choose Avalanche to be the layer. it's still not going to bring the volume that's needed. There's nothing that's going to be driving that because there's risk in it being outdated. Whereas if you put the national brand or the national, emblem on it, they can change technologies of the CBDC anytime there's a new iteration that they want. And it won't matter. There's not a rebranding effort that needs to take place.
Yeah.
It's the CBDC, and it's just the best digital token that exists on the earth. And that's the way that they're going to brand it. In my mind, that's the way they're going to control crypto, is it will become the base layer. It will become the new stable coin, if you will, that replaces everything else. And I think the stablecoin conversation is as the fact that nobody talks more about it, and it's not as hot of a button as some of these other things, yet more money is being made there than anything else. It just tells me that some very, very, very powerful, smart people are protecting that incubator so they can see what hatches, and then they can use what hatches for their purposes.
Stablecoins are the only other killer app besides Bitcoin in the entire crypto ecosystem. Like that is an indisputable fact. When you look at the money on a quarterly basis that Tether makes, is more than what BlackRock makes on a quarterly basis. That can't be ignored. And by the way, they have like 27,342 less employees than BlackRock does, right? So, and a guy like Nick Carter, who's a really, really smart guy, really, well known, but again, he's well known because he's smart, has been saying for probably 3 years that stable coins and the growth of stable coins is the killer app in crypto.
Well, what's the biggest elephant in the room that nobody talks about? Stable coins.
Yeah.
Well, how come regulations aren't just breathing down? The stable coins are the closest a dollar equivalent that's ever existed on the face of the earth. We've protected the dollar from counterfeits a lot. And the fact that these are growing and multiplying and becoming those profitable financial organizations, to me, tells me that's the path that's going to be adopted as the CBDCs, as the thing that's going to be. And listen, I may be totally wrong. This is all conjecture. But at the same time, when something that's unparalleled to human history never happened before, is happening, and it's making tremendous money and gaining huge traction in the financial world and being endorsed by the biggest names, and yet it's just grease and no friction. There are a lot of powerful people that think that's of high importance, and they want to see it flesh out on its own merits so that they don't screw up the natural order of things, which is, let's see how the market develops. Let's see which one is the best. Let's see how we can structure collateralized dollar equivalents, essentially.
Yeah, and so when we think about all this and we're kind of looking at, Bitcoin just kind of being, that thing. And we do this because there's still people out there who say, oh, no, this new shitcoin it does so many things that Bitcoin doesn't do. And it's so much better. So it's going to be the Bitcoin killer or whatever. We've been hearing that for years. But the fact is, even countries are starting to hold Bitcoin, right? So we all know about El Salvador. El Salvador's story has been huge, right? 2015, it was like the most dangerous place, most homicides anywhere in the world, right? Fast forward here 9 years later, and they just mentioned, hey, guess what, guys? We're not going to take on external debt anymore. We're going to finance everything we do by our Bitcoin holdings. And so they're doing this, but guess what? Now we hear Bhutan has twice as much. I think El Salvador's got about 45% as much Bitcoin as Bhutan does, and which is, I believe, a South Asian country area. And, again, these aren't the big ones. Everybody's like, oh, when's the U.S. going to do it? Well, if the U.S. does it, if somebody in Europe does it, or whatever, we're talking about large countries, G7, G9, stuff like that. They're going to be probably some of the last ones to do this, guys, because especially the U.S., it's USD.
Can I interrupt you there and just make a point? Currency. I think we're already doing it. How does the U.S. do things like this? Well, we feed money to the banks, And then we partner with the banks on basically public-private partnerships. And, you know, who's accumulating all the Bitcoin right now and where's it being stored? BlackRock. Where's that BlackRock Bitcoin being held? Right here in the good old US of A. And that is the way the US government can acquire the controlling interest of Bitcoin without ever buying one Bitcoin. It's through the traditional financial markets acquiring and holding enough of the Bitcoin to where they make the rules. And that's the way they do business. That's the way they do it on every level.
Yeah, no, exactly, man. I mean, it makes 100% complete sense. U.S. doesn't have to hold it; they just need to control it, right? And that's as far as a government goes, especially when you're such a large government with such influence throughout the world, economically, militarily, and whatnot. I mean, it's all about control, right? But when we look at these smaller countries and we go, okay, so why are they pulling it in? I think key point number 2 here on this BlackRock report is really probably one of the best points they had in the whole report. And it says, Bitcoin with its high volatility is obviously a risky asset, risky on a standalone basis. However, most of the risk and potential return drivers that Bitcoin faces are fundamentally different from our traditional risky assets. That's the thing, right? Which makes it unfit for most traditional finance frameworks, including the risk-on, risk-off framework employed by some, I would say by a lot of macro commentators. And I think, that's really an important point to understand. And I think that's the point. I think they probably recognize it, El Salvador, Bhutan, stuff like that. But even if they don't, what they are looking at, it's because of this point, right? It's this idea of protection, and you protect yourself because it's not the same thing that we traditionally, traditional finance looks at. No comments, huh? Okay. Well,
I know I do have a comment. I think it goes back to what we said earlier about, Michael Saylor. He did it because he had to. And these countries are doing it because they have to. And guess what? If Michael Saylor's right and these guys end up being right, what could, how do you pronounce it? Bhutan,
I think probably, yeah.
What could move Bhutan even into our conversation at this point other than Bitcoin? What could Bhutan discover inside of their geographical territory? Like they would have to discover the largest uranium mine or something of exceptional differentiation. And Bitcoin has the potential just to get them in the conversation. That is incredible by itself. Now, if they're right and Bitcoin goes up to where we all think it will, well, what has happened then is they've moved their country from, I don't know where they rank in terms of, value, GDP, but they moved themselves up orders of magnitude on the world stage. There's very few levers that can give you that type of opportunity and exposure. And so, again, if they're right, this will be forced upon everyone else. And the sooner you are in the adoption chain, the more value you extract from it.
Yes. Yeah, exactly. Their gross domestic product, their GDP is expected to reach 3 billion by the end of this year, which means that their reported holdings in Bitcoin is around a quarter of its GDP. Believe that.
Yeah. And then put it on a per capita basis. And then that country is viewed in a completely different lens from a wealth perspective on a per capita basis than any other thing that they could do. That's a pretty unbelievable thing. That's noteworthy for sure.
It's definitely significant. Again, we're looking at the idea that El Salvador holds about 45% of Bhutan's holdings. So, Bhutan really kind of just getting up there and just stepping out. I mean, they're basically doing the Michael Saylor here. They're like, listen, we're doing this Hail Mary thing. We're going all in. It's what it is. I think they're using hydroelectric power. And that began back in April 2019 when Bitcoin was around $5,000. So, and of course, El Salvador's looking at geothermal power from their, volcanoes coming up and doing that. So, man,
imagine a future 5-10 years from now where, how in the past 50 years, countries that find oil reserves all of a sudden start building skyscrapers and building man-made islands with 70-foot waterfall.
Don't know who you're talking about.
when you hit the money, it shows.
Yeah.
And what's going to be really interesting to see is how this as a driver changes travel destinations, changes, because if it pays big for them, they'll be able to change their entire country's tourist attraction. Essentially, they'll be appealing to a broader market than ever before, because they'll be so wealthy they'll be able to make their country reek of it.
Yeah.
Yeah.
And that's what it's all about, right? Everybody out there, there's a lot of people that argue, hey, at the end of the day, money, isn't everything. And I agree, it's not everything, but let's face it. If you're looking to establish yourself as an individual, a company, or a country, the reality is, you have to have a certain level of wealth. Wealth allows you to do things that you're not forced into anymore, right? Without wealth, you're forced into a system where you have to do as you're told, and you don't get to really choose, your path, really. The system is there with its frameworks and its rails, and this is what you do. When you attain a certain level of wealth, and again, whether it's an individual, a company, or even a country, when you do that, you're able to then step outside those rails, and you're able to do for yourself as you see fit. And I think that's the important point that a lot of people miss, when they just kind of easily shrug off, oh, well, money isn't everything, and all you care about is money and all that. And I think they miss the point there. I think they miss this point of, and maybe it's just here in the US because we're so radically, well, at least most people speak about it, freedom, right? We want freedom. But, we're talking about freedom of time. We want freedom of travel. We want freedom of being told what to do and how to do it.
I've heard it best described like this. You could take two people, right? And those people could be of the same wealth. They could both be healthy individuals. They could have great families. They could have great kids. They could have inner peace. They could be confident in who they are and why they're on the earth. They could own their own time. All those things can be true. But the one person out of the two that has the most cash has the most influence. That's the only thing that changes. So you can be as wealthy as a billionaire. You can be more wealthy than a billionaire because you could have a lot of things that they don't have on their list. They could have sacrificed a lot to be a billionaire, and there are intangibles in life that are priceless. And having a family, if you want a family, having one is a priceless acquisition. People who want one that can't get one would pay anything to have one. And so there's these things that you have to value as an individual, but I think really money is more about influence. And so if you're looking at a country, do you want influence? Yeah. If you're looking at a company, do you want influence? Yeah. If you're looking as an individual, do you want influence? Yeah. And so money allows you to buy influence. People are attracted to money. There is no doubt in that. I can assure you.
Yeah. Definitely. And as I always say, trading, I'm a firm believer, again, I'm a trader. I'm a firm believer that trading should, give you the ultimate goal of two things, right? They're both related to freedom of time and freedom of purchase ability, right? You be able to do what you want, when you want, basically, and spend your money how and as you see, fit. I'm a firm believer of that. And I think, if you're looking, otherwise, if you're looking at trading, it's easy to become a job. And most people kind of get into trading because they don't want, their job. They don't want their time to be determined by somebody else. They don't want how much they can earn to be determined by somebody else. So for me, that's always been the thing about trading. It's freedom. It's freedom of time. It's freedom of the ability to go where you want, when you want. We always talk about this, if you're in a country where the government says, listen, you cannot, right? The government says, listen, you can't leave. And you like, well, hey, listen, I don't want to be here anymore. I want to leave. I guarantee you, if you've got some money, you can leave. It doesn't matter what the government says. If you want to get into the US, sadly, there's people out there, you can pay them. They'll get you into the U.S. regardless of the laws and the military and the government and everything else. So,
well, I mean, even if you can afford a education, like it gets you in the U.S. if you just pay the tuition to get into a highbrow school, right? They love those students, right? So yeah, I couldn't agree more. It's all about freedom, and it's about influence. And trading, I would say that everyone's trading whether they know it or not. And what do I mean by that? Well, trading is about giving up time for more money.
yeah.
So you can do it on the positive side or on the negative side. What do I mean by that? Well, some people are top line earners and some people are more bottom line savers. And if I'm the bottom line saver and I wait and I strategically time when things that I want to buy are cheap, I'm trading. I'm trading my time and effort for a discount, for a delta in price. And that is literally what trading is trading your time and attention for a delta or a change in price. You trading in the markets most of the time is for a delta on the positive side of making money, but saving money is the same thing. You're trading effort for discounted for a better price, essentially.
Yeah. Yeah. Well, I think that'll do it, guys. We're here a little bit over. I love that we've always got something to say, and hopefully, people are tuning in and really kind of getting something from it. Again, guys, as always, we'd love to answer questions and maybe discuss things that you guys are interested in, on the next episode. So, if you've got questions or whatever, or you've got things maybe you'd like to hear us talk about, write them down underneath the video here on, wherever you're seeing it, whether it's on Facebook or Twitch or YouTube or X or whatever. And I'll make sure that, that we discuss it. But make sure you guys go ahead and go like the video, share it, let other people know about it, leave a comment. We'd love to hear from you guys. Again, we don't get paid to do this, but we do enjoy doing and sharing our thoughts as people who have been, in crypto and traditional finance and markets, for quite a while now, and even mining, and so we have these varied kind of understandings of what's going on and what may be coming out a little bit later there. And we love sharing them. So I appreciate you guys showing up as always, Andrew and Tillman. Listen, guys, make sure you're following them. Andrew's AP_abacus. They're on Twitter. And Tillman is Texas OL. Say 61. It, man. 61. Yeah.
61.
And I'm TX West Capital. I always have Tillman do this because now I'm just like completely freaking out every time.
No, tell him the truth. You're a tech fan and you refuse to give any acknowledgement to a Texas football.
Hey, listen. Before we go, let me just say, Archie looked good, man. Okay,
hey,
I'm gonna say he's got legs.
Archie, how about the whole
legs
team,
like the other
man?
ones don't.
We're here to stay in the SEC, and I'm expecting to bake a bunch of crow pie dishes this year. So we're off to a good start.
Well, they're definitely going to be. Texas is definitely going to be, I think, exciting to watch this year, guys. If you didn't see the last game, you need to see it. Like I said, Archie's got legs that the other ones haven't
had. No. Listen, he was burning. He was taking distance. He was gaining distance on some of those DBs. Yeah,
it was insane. It was insane.
Yeah.
But anyway, yeah. So there we go, guys. Other than that, make sure you check out archpublic.com there for these guys to see what they do there with their algorithmic trading.
Thearchpublic.com.
Yeah, I left the word thearchpublic.com, guys. Again, the link's on the video here. You can also check out what I do over there, twctradersclub.com. We launched that yesterday. Getting, the trades that I'm taking, Fibaswani's taking, Andrew's taking, well, not this Andrew, different Andrew Bennett from TWC. And market updates and everything else along the way there. So jump in, check it out, twctradersclub.com. Guys, I hope you have an amazing week. Trade safe out there. And I'm going to say it again, follow Andrew and Tillman out there, guys. They do happen to post some stuff worth reading. Believe it or not, they do. You don't have to agree with it. Just like me. You don't have to agree with it, but definitely watch for it, all right? All right, guys. Thanks a lot. As always, take care. Remember, folks, at the end of the day, the only thing you control is how much you lose if you're in the markets there, okay? So make sure that you're constantly working on your risk management. It's going to afford you the greatest return on your money that you're actually putting in the market over the long run, okay? Y'all take
Appreciate
care
it.
out there. What was that?
You bet.
All right.
Appreciate you.
You guys, everybody take care, and we will see you next Wednesday, all right?
Mm-hmm.
Take care, everybody.